Today's episode of This Week in Startups is brought to you by Squarespace, an all-in-one platform that makes it fast and easy to create a professional website and now an online store. For a free trial and 10% off your first purchase on new accounts, go to squarespace.com and use the offer code TWiST. And by HostGator, your one-stop shop to getting your business online. Your domain name, your website design, and even your marketing. They've got you covered. Have questions? Their team is there 24/7 via chat, phone, and email to help you. Start today for 30% off with the coupon code TWiST.
Hey everybody, and an amazing episode of This Week in Startups. Benedict Evans from Andreessen Horowitz is here. He's a super brilliant analyst, and he has his deck about unicorns and this presentation he did. Additionally, Molly Wood from Marketplace is on the program. She's previously from New York Times and CNET. And these are two of the smartest people and funniest that I know in the industry. And so we have a roaring good time talking about the state of financing of companies, especially late stage and IPO. Then we talk a lot about Apple and their new content app, their Flipboard killer, essentially. And then that leads to a discussion about curation and finding amazing things on the web. And then we talk about the massive turmoil at Twitter, and is Twitter what Twitter should be, who should run Twitter. It's an amazing stream of consciousness that ends up in virtual reality, and what these experiences could be, and which is going to be the biggest industry for virtual reality: porn, adult entertainment, education, or games. And we also talk about Mad Max Fury Road, and we talk about television shows, and it is awesome. You are going to love this episode. Put your headphones in and go for a long walk. Put your Fitbit on and show me a screenshot of your Fitbit, and I'll retweet you if you tweet your hike and what part you like best. I'm at Jason, and this is This Week in Startups. Stick with us.
That's what it's all about, man. They said money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you. Yeah. Money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you.
Hey everybody, welcome to This Week in Startups, and my voice is coming back after that huge Warriors win over the greatest player in the world, as he is prone to tell us, LeBron James. And tonight, my Warriors are going to bring it home. You're probably asking yourself, like, hey, Jason, aren't you a Knicks fan? Yes, I'm a Knicks fan, but Jim Dolan has been destroying the team for 20 years, and I'm out here in California trying to make $300 or $400 million so I can put a goddamn down payment on the Knicks and save the damn team. So forgive me if I want to go see some Warriors games, and I'm pretty psyched about the way they play basketball. They're just an amazing team. Congratulations to them. Hey, everybody loves the News Roundtable. We don't do enough News Roundtables. I know, I hear you guys loud and clear. We're going to do more News Roundtables, and today it is a powerhouse News Roundtable. Really thrilled that Molly Wood is back on the program. Of course, you know her formerly of the New York Times, formerly of Buzz Out Loud, formerly of CNET, but now she is with Marketplace. You're just padding the damn resume now. You're just showing off.
I'm just making all the steps.
From CNET to New York Times, and then now to Marketplace, which is your dream job. You told me that confidentially.
Marketplace is basically my dream job. Yeah. Now I've said that out loud too.
Why is that your dream job?
It is. I love radio. I really do. And that's the thing that I realized in podcasting is that I love radio and I love audio as a medium. It's so personal. You can't hide anything. With video, with radio, you have to be a little bit brief. But with video, you can take boring content and put a pretty picture on top of it. Sure. But with radio, there is nowhere to hide. Right. And you're with people wherever they are. Like, I think it's this great underappreciated medium. You're in the car with them. You're at the gym with them. You're on their bike. Yeah, it's very intimate. I think that's the thing people underestimate about it. And now it's amazing the resurgence of NPR and the public radio stations, thanks to like Apple's podcasting app, all these other podcasting apps. If you go down the top 100 shows, what is it, like half of them are NPR and American Public Radio? Public Radio, yeah. And so, it's a great time to be going back. And then for me, it's extra exciting because I get to combine all the years of tech with starting to talk about finance and economics and global politics. And so it's as a news person, it's a great way to sort of add.
And they just got Yarl Moan to come run NPR or American Public Radio?
That's NPR.
NPR. But you're American.
I'm American Public Media.
What's the difference between those two? I don't know the difference.
American Public Media is also a content distributor, and they own like This American Life and a bunch of – they're out of Minnesota, and so there's a bunch of Minnesota stations. But APMG, American Public Media Group, is the largest owner and operator of public radio stations in the U.S., which means that a lot of NPR plays on APMG.
Okay.
So we're frenemies.
Yeah, but none of this is for profit.
None of this is for profit.
Right.
It's all public radio.
But the people
which is kind of fun, too. I don't have to worry about advertisers.
But the people who run the shows own the shows in some cases. Like, does the guy own This American Life? Like, it's his brand? And he licenses it, I think?
I think so. In some cases, sure.
Yeah.
Like a TV network, though, that's the same with the Letterman show, right? Worldwide Pants.
All right, well, anyway.
There's probably some of that going
Congratulations on that. And then on the program, of course, with us today, a lot of people are very excited to have Benedict Evans on the program. He is a partner at Andreessen Horowitz, but he's also like a really smart cat, and you're really good at Twitter. I think that's a pretty good introduction for you, Benedict. He's also really funny.
I give good Twitter, yes.
You give very good Twitter. You're hilarious on Twitter. But now your job at... What is your job at Andreessen Horowitz? Everybody knows Andreessen Horowitz is the largest venture capital firm now, billions and billions of dollars in funds, very successful. And then you came to work for them, not to invest in companies, but to do what?
Well, I do a bunch of things. So I do look at new companies and sit and deal with you and try and work out what we think about potential opportunities. I spend probably most of my time trying to work out what's going on and what's going to happen next. And that sort of sits, I think, within the broader sense of Andreessen Horowitz as kind of unbundling what the general partner does. That is to say, the classic venture firm, you go to your partner and you say, I need to get into the Wall Street Journal, I need an introduction to General Electric or Google, I need a CTO, and he knows somebody or he doesn't, and it's a big load on his time as well. And at Andreessen Horowitz, there's a talent recruiting team, an exec recruiting team, and a PR team, and a business development team, and so on.
Right.
And so you kind of professionalize all of those things and unbundle them from the GPs. And I suppose I sort of sit somewhere in that, in the kind of the trying to work out what's happening and how to explain it and how to explain that to the broader world.
Right.
And the presentation we put out yesterday is one part of that, about sort of VC venture funding and the state of venture funding. But then there's all sorts of other things we do as well.
Let's talk about that, because this was a really great presentation about tech funding. And I kind of felt like it was a little bit defensive because Andreessen Horowitz is being accused of like, oh my God, you're running up the bubble because you invest big dollar amounts because you're a big fund. It's kind of unfair. I mean, you guys are not just throwing money at anything that comes through the door.
Well, or are you?
Or are you? Yeah.
Well, there's kind of a narrative that says that, you can come up with if you pick any kind of thesis for how you should invest, then you can find amazingly successful companies that you'd have ruled out. So
right.
You wouldn't have been in eBay, you wouldn't have been in Yahoo, you wouldn't have been in Google or whatever it is.
Sure.
And so effectively you have got no clue what's going on. So you actually should just invest in every single company that you should see, which is kind of the 500 startups approach in a sense.
Yeah, how's that going for them?
I have no view.
Not well.
I don't have a view at all.
Yeah.
I think the perception that we massively overpay is sort of, it's sort of slightly unfair and it's slightly outdated. The investments that we made a couple of years ago, when people said those prices were crazy, they turned out to be really cheap. And we haven't done any particularly big deals of those kind in the last couple of years.
Right.
As the market environment has changed. Beyond that, I got there a year ago.
There's a lot of bubble talk. So here we go.
I think there's a broader point, which is that just to the people who haven't seen the presentation, what we really did was three things. First of all, look at what's going on in the public markets.
Yeah, turn the deck on, guys. Here we go. What's going on in the public markets?
You kind of look at the sort of slide 4 and 5, maybe sort of go forward a couple of slides. So, go forward 2 slides, one more. Yeah. So you look at what's going on in public markets, it looks like things are edging up a little bit. But then if you go to the next slide, you see PE ratios are basically flat.
The price-earning ratio.
So the valuation, the multiples that people are paying in the public markets are flat, and there's a whole bunch of data about that. Basically, there's not really any argument here. There's no bubble in public stocks. The question is so it's not 99. The question is what's going on in private markets.
Right.
And I think as you unpick that, what you see is there's really two things going on. You have a surge in large rounds for big, well-developed, relatively mature companies, Uber, Airbnb, and so on. Those rounds tend to be led by what you might call non-traditional investors, so hedge funds, private equity firms, mutual funds, as opposed to classic venture funds.
Yeah.
And a big thing that's driving that is that those companies are going public late. And
this is basically the IPO is happening privately.
So effectively, yes. So you have people who would have
privatize the IPO.
People who would have bought the IPO, buying at a stage where you would have done an IPO. But doing it with a valuation that doing it with, say it's $1 billion, it's $5 billion, it's $10 billion. But the difference from the IPO, of course, is that when you did an IPO, you could see the numbers.
Right.
So a journalist can look and say, well, this company's gone out at a market cap of $10 billion and it did $3 billion of revenue. Whereas with these kind of rounds,
they're very opaque.
You don't know what the numbers are.
And I feel like there is an increasing amount of question about private valuations because they're hard to prove, they're highly suspect. And nobody, I don't.
And you also have terms.
It's 1999, but it's a different kind of bubble. Hedge funds are in companies based on private valuations that no one can prove.
Well, here's the thing.
Well. So just to stop you there, when you say no one, what you mean is no journalist. Because the people who are doing the investments know what the numbers are.
Well, the people who are doing the investments always know what's going on, but that doesn't mean the public wins.
But that's kind of a slightly separate conversation. You can't say that the valuation of XYZ company is wrong because you don't know what the valuation is.
That's true.
You have literally no idea.
I can't say that it's right.
But you have literally no idea what the valuation is. It's the people that are doing it get to see those numbers.
But if a hedge fund who owns my pension is in that and they can't, do they know? They can. Is that what you're saying? That
they've seen the numbers.
People who are investing have seen the numbers.
And there's another.
Well, the people. Here's the thing. Molly makes a good point. The people whose retirements are in them do not know.
Right.
But the hedge fund managers do. So you're basically
totally trustworthy class, by the way.
Right. I mean, I think that's a valid point. I thought Benedict had you for a minute there.
There's another issue.
Can I get some popcorn in here? This is going great.
But there's another issue here, which is that, the company that is floated on the stock exchange with a market cap of $1 billion is not the same as a company that raises a round with certain structures and certain terms, liquidation preferences and so on, with a sticker price of $1 billion. It's not actually the same at all.
Right, because when you buy the public stock, you don't have.
It's one class of stock.
Yeah.
There's no liquidation preferences.
There's no backstop against losing your money.
Yeah, you bought X% of the company, and that's what you bought. Whereas if you buy it with a 3 times liquidation preference, then you haven't actually paid $300. You haven't really paid $1 billion.
I think a lot of this, Molly, has to do with the fact that people are so nervous about what happened in the financial crisis and what happened in the dot-com bubble. Isn't that it? Like the psychology of Americans is like whenever they see something getting very big, they go, oh, I'm about to be screwed.
Yes.
Because after the last two, they got really screwed, which is why they don't buy stocks anymore.
After like the last 10 or the last 20. I mean, what happens is that generally people do get screwed. If there is some sort of a run-up. I do agree with you, though. I don't think that there's the kind of broad exposure in the market that there was in 1999.
Right. This is triggering people.
It is triggering, but it is triggering.
But look at this
people.
data. This is where I think you slam dunked it, by the way. Let me slide 8 here for a second. This is really good because the percentage of the S&P for IT, which would include internet companies, is relatively the same. And then this is the one where I think you really killed it, which is if you look at the market size right now, we all know there wasn't very many people online, and now you have this tremendous number of people online, especially because of smartphones. And then finally, the funding per capita, I've never seen anybody actually use this, but if you put the funding amounts against the amount that's being invested, it's like, well, $100 or $200 per person is being invested. Well, that seems quite logical to me that you would put $200 per person against an audience. That would be like saying a movie studio or a television network or HBO might be putting how much against each $360 a year subscriber or whatever it is, or Netflix,
Yeah.
Who came up with this slide? You came up with this one, Benedict?
Sorry?
Who came up with this? Is it your idea here?
This is Mark's slide. I actually hate this slide.
Why do you hate this slide? I love this slide. What do you hate about this?
Just because there's so many different things being multiplied together. I mean, it's a great way of making the rhetorical point. I mean, I think if you go forward, I think the next slide, I think it's this one. This one's kind of the clearest one, which is, in 99 and 2000, there were, 45, 30, $50 billion total value to be captured by e-commerce and advertising in the US.
It's 10x.
And it's up 15x since then, and that's adjusted for inflation incidentally as well. So it's gone from being, excited about what was going to happen to being excited about what is happening. That's really the difference. It's all working now.
I think there are real businesses, and I think there's real money being made, and I think there's a much deeper foundation, no question. I think what triggers is the perfect word, and what triggers people is that to some extent the exposure is more hidden. Because venture capital itself became an asset class. Nobody exactly, maybe there's a way to. I want to do a story where I back out how big venture capital is as an asset class for some of these hedge funds and banks and companies who have traditionally invested.
The simple answer is absolutely tiny. In fact, the concern would be how small this is as a proportion.
All right, when we get back,
funds, not how big, because they could walk away and not care.
All right, when we get back from this commercial break, we're going to continue debating with Molly Wood and Benedict Evans the relative size of the venture capital space versus the overall investment space, as well as what's going on with Apple creating an Inside.com killer, circuit killer, and a Flipboard
What's
killer.
Inside.com?
Exactly. Thank you for that. That's exactly what Tim Cook said to me when I called him. And then the Game of Thrones over at Twitter, obviously Adam Bain or Jack or Tyrion Lannister are going to be the next CEOs when we get back on This Week in Startups. Oh, I'm supposed to read the ad now? We're not just cutting to the ad? Okay. Hey, let me just say thank you to my friends at Squarespace, which is a great company out of New York, my hometown. And they make a beautiful, dead simple product that makes beautiful, powerful, robust, reliable websites. I know because all of the launch websites are based on the Squarespace platform. If you have a family member who wants to use Squarespace,
yes.
Benedict?
Yep.
You're a huge fan.
Very happy with it, yes.
Yeah. I mean, just so you know, when Benedict Evans says, I'm very happy with something, that's like the rest of us, like turning the table over and going, yeah, baby. I mean, that's about as, he's got a range. He is thrilled with it, I can tell you that. And it's responsive design. It's commerce comes with every website, and you can start a trial with no credit card. Start your trial before June 30th, and you will get a free custom email and business tools when you sign up. For professionals, use the promo code TWiST for 10% off. And make sure you enter that code because then they know that you love the show and you love the fact that they support the show. Beautiful, simple, elegant. And again, you could hire some developer to do all this stuff and then wait for the developer to get out of your way and it's not responsive. Or you can just use Squarespace and like anybody, like a civilian like me or Benedict or Molly can like update the website. I can just say like, hey, put a page up about this and it's up and running immediately. And when I put a website up like for the Bastille Day party, it's just immediately up the same day. I don't have to worry about anything anymore. I don't have to hire a designer. Literally, their websites cost like a couple of dollars a month, and they look like somebody spent thousands of dollars on it. So thank you to them. All right. And let's see if they got any other. You had something to add.
I do. Can I do a quick correction? Because I can imagine that my Twitter is blowing up right now and my bosses are freaking out. I said that APM owns This American Life, and what I meant to say was Prairie Home Companion.
Oh, gotcha.
I know that doesn't seem like a super important correction to you, but in the public media, in the public radio world,
right,
it is.
And do you know why it matters so much? Because there's so little at stake. That's the classic joke about it's a classic joke, but that's what they like the indie film industry. They're like, you know why it's really so contentious? It's because there's so little at stake.
Shut up.
Okay, so everybody, so the press is doing a bunch of headlines, blah, 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 blah. But the funding stage is in late stage only. That matches what I'm experiencing. It's only the late stage companies that are raising all this money.
Yeah, so you get through, there's a sort of slide about halfway through that sort of splits apart. Really what you have to do is you have to look at funding as sort of IPOs, things that are more or less quasi-IPOs, and then, so you can kind of see it. So you go back.
By the way, it's quasi. I'm just joking with you.
So you can,
I love doing that with English guys. It's so much fun.
If you go back to the, be careful or we'll revoke your license to the language. You have to speak German instead.
We don't speak English. We speak American here.
So if you go back a slide.
Yeah.
So what you can see here is you really have to stack IPOs. First of all, you have to stack public and private funding together.
Right.
So you can't just look at venture. And secondly, there's this whole class of private funding, which isn't really venture at all. It's this it's sort of blowing into what would have been an IPO in the past.
Yeah.
And so you can see, first of all, the surge in the last year from 13 to 14 isn't anything like what you had going into 99 or 2000.
Right.
And secondly, you can see the increase is really all in the late stage. And so there's a couple of things here. First of all, as we said earlier, yes, it's not like 99, but that's actually a really easy argument to win. It's not the point. Well, fine, it's not 99. So what? What's happening now?
Right.
The second point, I think, is that you've got to split apart what is going on in these growth rounds from what is going on in the rest of the market.
Yeah.
And in fact, the divider slide we have in the presentation says, meanwhile, back in venture capital, as opposed to all this growth stuff.
Yeah.
And so what you see, the slide here is, there's a surge in funding for the big deals got bigger.
Yeah, and in fairness, the big companies are getting bigger now.
Well, this is the thing.
That's what people don't understand is how much revenue these companies are making.
How many companies were there the size of Uber or Airbnb in 99? Yeah. But then you've got this whole other set, which is like the third half of the third third of the presentation, which is, okay, what's going on in these $5, $10, $15 million rounds? And what you're seeing there effectively is many more deals going on at a probably the same average or even lower average valuation than was going on in the past, simply because it's so much cheaper to create companies. And so you've got this surge in seed funding, a collapse in the cost of creating companies. And so the absolute dollars at stake, the total amount of money going into that portion of the market has been flat. The number of companies has shot up, and the amount of average or non-average being given to the company has gone down by a third or 2/3, depending on how you cut it.
But doesn't that create an ecosystem in which a lot of people have more to lose? I mean, if it's cheaper to create, if it's a bunch of those companies then who exist, who have been funded at smaller levels, they all exist, they all have a company.
You know what it is?
Each one of them is a little baby CEO.
Here's what happens.
Where do they go?
I have to explain this to a lot of people because the issue is failure and dealing with failure on a name basis and a dollar basis. So if you look at 10 investments, right? And let's say as an angel investor, I have 7 of 10 die. So I'm a 70% failure. But if those were each $100,000 investments, but then on the 3 winners, I put $1 million into each of them.
Right.
I would have lost $700,000, and then I would have put $3 million in addition to the original $300,000. So I have $3.3 million in investment in those final 3 in total, and $700 in the failure. So it would actually, on a dollar basis, be more like a 20%
I totally get
loss
that.
because you're tripling down on the winners.
I totally get that.
Yeah.
But for the 7 people, the 7 failures, who had employees, who contributed to the housing market,
they just go to work at Google.
Moved here.
They go to Google.
But
do they go to work at Google?
Oh, for sure.
Google max out and they have to move away. And
Right now, yes, they do. But also, 15 years ago, that wouldn't have been $1 million investment. It would have been a $10 or $20 or $30 million investment.
The crater is much smaller when they fail.
And it wouldn't have been 10 people discovering this company isn't working, we've got to do something else. It would have been 150 people discovering this company isn't working, we've got to go and do something else.
Yeah, the craters are very tiny now. Like, in fact,
but
today...
there are more companies now. I mean, yes, but I think the overall numbers of people discovering the company doesn't work is arguably the same. Because it would have been fewer companies with bigger valuation, whereas now it's more companies.
There's a lot more angel investors now. That's a very valid point.
And there
but here's
are a lot
the thing.
More angel.
The angel
What's the exposure there?
The exposure is a bunch of people who made $5 or $10 million at Google or Facebook, on average, something like that.
What they're doing?
Are spending $250,000 a year pretending they're professional investors, hoping to hit a lottery ticket. And if they lose their money, they've lost 3, 4, 5% of their net worth. In other words, they'll make it back in a year on the stock market.
But are they helping prop up an artificial economy that affects the people who then, I mean, if they're making bad bets and those companies are destined to fail.
Yeah, the problem is the craters are so small, right? So like literally today I was dealing with a $2 million crater, right? I'm dealing with a $50,000 crater right now. Those are the 2 craters I'm dealing with. And as I told both of the people, my exposure in one is 50, the exposure in the other is 50, some other VCS 1.9 in the other one, or 800. And it's you know what? On a percentage basis, if you looked at it like poker, in a poker game, it would be like playing 1 or 2 bad hands, or maybe 1 bad orbit, like 10 hands.
I think there's a deeper point in here, which is that most companies fail and most companies have always failed. And that's not actually a new ratio. The difference is now you have this enormous market of internet companies and new types of businesses that can be created. And so you're having lots of people create these companies. And the proportion that succeed is probably much higher than it was in 1999 because you've got a real market now. Some of them will fail. That's okay, actually.
Yeah, actually, I say the big trend is the zombie companies, as I call them, which is they make enough money to pay for 5 people, and they don't give up. And it's well, this is never going to break out. You've got 5 or 10 people putting their effort into this, not sleeping at night, causing anxiety, causing depression, on these crazy outliers, causing suicides in founders, because there are people who are, maybe don't have the mettle or the proper mental health to be founders. And they get propped up for a couple of years, and then all of a sudden you just have this crazy implosion. I just tell those people, do you really want to be doing this? Because it's not going anywhere. Let's just sell the asset. Let's wind it down, and you can be happier in life. Because if you're running one of these companies that's just going sideways, you're not going to be happy. And it's an opportunity cost. That's really what I say is a lot of opportunity costs in the market. I don't know about you, Benedict.
Yeah, I think that's right. I mean, you always have to be conscious that, as an investor, you're running a portfolio. And as an entrepreneur, that's your one thing. And
that's why I got out of it.
You have to think about, you always have to think about where the incentives are, and also, whose time is this?
All right, let's go into a story about Apple here. Apple is in the news. They have, and by the way, you can go just type in Andreessen Horowitz, and I'm sure this is on the homepage.
Yes.
Yeah. So type in Andreessen Horowitz or follow Benedict Evans on Twitter.
Yeah, just Google me or Google A16Z.
You'll find all this great stuff. All right, so this is the crazy thing. Apple has apparently launched what we would all call a Flipboard knockoff killer. It looks exactly like Flipboard. They didn't buy Flipboard, which is kind of interesting to me since Flipboard has been the premier iPad app that they would show at a conference. They basically knocked it off exactly And they're working directly with the content creators, giving them 100% of the ads that are sold in it. And New York Times, ESPN, Condé Nast, and more are doing it. And then I found out, oh my God, humans are curating it all, which is exactly what I'm doing at Inside, which is exactly what Circa is doing, and not what actually Flipboard has done traditionally. And then semi-related, Benedict, you tweeted about ebook sales going flat for several years, and they're at a quarter of the volume in all of this. What's happening, Molly, and why is Apple doing this?
I don't know why they have decided to get it. That's the part that I think is so interesting about this story is I don't know what they're doing. I don't know why they have decided to human curate news other than the fact that they have possibly been convinced by the acquisition of Beats that the way to sort of handle media distribution, I mean, it is very much in Apple's history to handle everything as a package that they put together and hand to you.
Right.
That you clearly cannot figure this out for yourself. So it is best if they just intervene.
Make a simple experience.
Make it a simple experience.
And the newsstand kind of
with their own expertise. The newsstand is terrible. But I think where it relates to ebooks and where it relates to I gave up on using Flipboard. I follow Inside on Twitter and I find good stories there, but I'm not particularly interested in strangers and algorithms curating news for me.
Right.
I am interested in what my friends are reading.
Right.
And to me this suggests that Apple still this will be their Achilles heel forever, and I don't know how fatal or dangerous it will be to them, doesn't get social.
Yeah. What do you think?
This just doesn't feel social.
So there's a couple of things to unpick here. First of all, I think you have to look at news and music together.
Okay, because that's the first I'm hearing of this.
It's a similar model.
Because both of them are saying, look, here is this database of 1 million things you could read, which is Google, or 1 million things you could listen to, which is any generic commodity streaming library, Spotify or Google Music or iTunes. If you had just added streaming and forgot about it, fine. What am I supposed to read? What am I supposed to listen to? How am I supposed to know what to read or to listen to?
Where do I start?
Yeah, and going to Google and saying what should I read or what do I listen to is not a valid search query. Going into Spotify and saying, well, okay, I like that. What do I like now? Is actually, it doesn't really get you there.
Right.
And so just
Pandora does.
Giving somebody a database in a search box doesn't help. So the question is, well, what do you lay on top of that? Now, you can argue that social does that. The problem with Facebook is that the average user is eligible to see whatever it is, 1,000 items a day or 1,000 items a week. So you can follow a musician or you can follow Wired in Facebook. You might see their stuff. Maybe.
Probably not.
Probably not. Completely random.
But I don't want to follow the artist. This is the constant assumption that I want to follow the artist or see that or get discovery that way.
Well, I think the question here is, do you? I actually do. If I'm interested in Wired. And this comes back to the newsstand point. Yeah. So I want to follow Wired, or I want to get the New York Times, or I want to get the New Yorker on my iPad or my phone or wherever. Okay, how do I do that? I can go to the website once a day and see if there's new stuff. That sucks. I can sign up for RSS. Well, RSS died, and that was never mass media anyway. I can follow them on Facebook, and I might or might not see their stuff.
Yeah, and it's entirely
random whether I see it or not.
And the Twitter feed, constructing a Twitter feed is just way too much work.
And so
it's got to be automagical like Pandora.
Yeah, so the question for both of these is, you've got this generic database of content. How do you know what to read? How do you know what to listen to? And, is there a way of providing an intermediary recommendation engine that's partly manual, partly algorithmic?
Which you do with your newsletter, right? You do your mobile newsletter where you pick what's important, and people go, hey, Benedict Evans is smart, he curated this, and you have 50,000 people on this thing.
And the thing is, it's not fashionable, and it's not politically correct in the sense of everything has to be fully automatic and algorithmic. But it's not like Google solved this problem. We tend to talk about like the world before 2007, as though like everything worked perfectly because you had Google, and I don't actually think that's the case.
Do you think curation is valid or not?
Yes, I definitely agree that the human curation element is very important.
Right.
I really do. I just don't see enough social in here, and I am not sure that I think it's harder, and this is why the humans are important, particularly with news, to say, well, if you like a story like this, you're going to like a story like this, because in fact, I'm going to like stories about everything.
All right. When we get back from commercial break, I am going to explain, as the CEO of Inside.com, what I think.
What it is.
And what it is. Thank you. God. They're British. social versus curated. I'm going to actually tell you what the benefits are and how I'm going to actually make it work. Anyway, hey, if you want to make your business work, go ahead and use HostGator. That is the company you want to align yourself with, because you're going to need web hosting and a domain name from HostGator. One-stop shop for all your online businesses. You can do a one-click WordPress install, drag and drop builders, easy setup, and custom email addresses, in-house design, SEO, and PPC services. So if you want to do that scaling stuff, you can do that. And as you grow, they'll seamlessly transfer you from $4 a month for the shared hosting accounts to a VPS and dedicated servers and all that good stuff. 24-hour, 7-day a week, 365-day a year live support via chat, phone, and email. And we love them so much. We use them here for the TWiST site, and we host with them. It's super affordable, especially compared to Amazon, which was murdering us on our bills, and we saved a lot of money putting all these huge media files for the show up there. It's a very reliable service. We've had no downtime, and the support is fantastic. Response time is within 2 hours, and it's super quick and easy to set up. They guide you through everything, and everything is clearly explained with screenshots. The first 100 TWiST listeners that go and sign up with the promo code TWIST25 will receive 1 year of the HostGator Hatchling package for just $25. That's right, 1 year for $25, $2 a month. If you use TWIST25, it includes unlimited disk space bandwidth, unlimited MySQL databases, unlimited email accounts. And this is what you're talking about before, Benedict Evans. Like, starting these companies costs nothing. It's so affordable thanks to people like HostGator. That's a callback right there, baby. That's professionalism in radio, Molly. You understand a callback? See that?
No, tell me all about it.
I don't know. I'm just figuring it out. It's year 6. I should figure some of these things out and be a professional. Is there like a book I could read about how to be a better host of a show?
Yes.
I want to read the book.
I ordered like 3 of them.
Oh, good. Yeah, send me that. I have to like repeat everybody's name. I'll do my NPR voice when we get back from this break. And don't worry, if you don't receive one of the first 100 packages, you can still save 30% using the promo code TWIST. Thanks again, HostGator, and welcome to the family. Do you know This Week in Startups is almost sold out for the entire year? It's not a bubble. No, it's just a great show. Hey, everybody. Welcome back to This Week in Startups. I'm your host, Jason Calacanis. You can follow me on Twitter at Jason. You can follow the show at TWI Startups. My guest today, Benedict Evans from Andreessen Horowitz. You can follow him on Twitter at Benedict Evans. And, of course, Molly Wood, the senior tech correspondent for Marketplace, is with us. Welcome, Molly Wood, to the program.
Wow.
That's pretty good NPR voice. You have to admit, that was pretty good.
That was good. You know what I like about APM? They don't make us do that.
They don't make you do the NPR voice? They literally asked me to guest host an NPR show. What was it? The Something of Culture. What's that show? The Something of Culture. The Art of Culture. The Benedict of Culture. The Voice of Culture. Anyway.
Apparently we have no culture.
Exactly. So anyway, Emmy Award-winning producer Jackie, look up what is the one from KCRW that's the Something of Culture. Anyway, so I host this thing at KCRW, and I just go in there, and as a joke, I tell my friend, I'm going to go in and do my funniest NPR voice. And I'm like, this is Jason Calacanis, and you're listening to KCRW and KCRN. The voice of Santa Monica, but it's really funny.
And they loved it.
Oh, that was the punchline. I get out and they're like, "You're amazing. You're such a natural." And I was like, "Oh my God, they have absolutely no." It's a politics of culture, and I was like, "They have no idea that I was literally making fun of them the way Benedict Evans is making fun of Inside.com." So here's the thing.
You might not know.
Here's the thing about the curation stuff. Social is a level of curation, right? Your friends show you the best stuff. What I believe is there's a new art/science of curators that will emerge. And we're in only the first inning. Benedict is one. Jason Horshorn is one with the Media Redefined. The Launch Ticker is one. And it basically means that somebody who you respect looks at this just huge, massive news and says, hey, just pay attention to these couple of things. A reviewer is like that, except a reviewer is sort of forced to review everything. So like it would be more like just a random collection of things that you should pay attention to. Brain pickings is another. There's a bunch of people who are starting to merge.
So the thing I think is interesting at the moment is how many people are trying to unbundle Yelp.
Right.
And, unlike Craigslist, which is, let me pick the right word, a rather eccentric company, Yelp is basically a well-run modern company that does like normal modern things you'd expect that company to be doing. And yet it hasn't solved the problem because you have all these people trying to find ways of unbundling basically restaurant content from that.
Right.
And I think the challenge here is, to my point earlier about, giving people a search box in a database. I moved to San Francisco, I open Yelp, it tells me there's 25,000 restaurants here and they all have 5 stars.
It's really hard. Have you tried the new Foursquare?
Yes.
The new Foursquare is amazing. It knows that you're into hipster coffee. It knows you're into, for guys like Benedict and I, that we eat far too much pastry. So it's like, you open it up and it's like, oh, you're a fat bastard. How about some beef patisserie? Go get a Queen Amman. It just knows that you
patisserie.
Eat patisserie. Thank you.
I think that you raise an interesting point. that came up a little bit in WWDC and obviously in Google I/O, which is that contextual might ultimately be more powerful than any of these things. Like, I think the curation.
Yes.
I'm not saying curation doesn't matter, but I also think it's a false premise to say that there's a database and a search box, because I still know.
Location.
Well, it's what is the right filter.
I still know when I like.
You need some filter beyond just saying, well, here is everything, a type of text query.
Yeah, the filter can be me. I know what kind of music and food and music and books I like.
The thing is, it's multiple vectors, so it's so hard to get this together, because here's the thing. There's where you are right now and what time of day it is, and what you've previously done. Right. So there's your behavior, there's your location, there's the time of day, and then there's this other one, which is your aspiration or what you might at some point be into. So what Foursquare has actually started to do is, like, Yelp's like everything, like you're saying, and then it's like, well, here's everything around you. But what Foursquare started to do is say, like, hey, here's some behavior in the past. We know that you checked into hipster coffee. Now you're in New York. We're going to start showing you hipster coffee. Or if it knows you've checked into sushi, or if you just checked off you like sushi, it's like, it's lunchtime. What do you think of an omakase here? And it's like, oh, wow, that's kind of scary. But it's actually not. It just takes a little bit of extra technical work. So what I'm doing with Inside is, back to what Inside is, Inside started as like, hey, what if you create the top 100 stories of the day? And we got, 100,000 people really love that idea. But now what we've done is Inside Drones, Inside Cannabis, Inside San Francisco, Inside Cars, Inside Gadgets, Inside VR. And we're going to do 100 of these verticals, apps, and communities. And then that sort of starts you on second base, which is, we already know that you're into cannabis. We already know that you're into TV or movies or documentaries. Now we can really start the curation of, when you open the app and you see the top 25 stories of the day, that becomes addicting. And that's really what you're doing with your newsletter.
Yeah, exactly. It's all about how do you, it's actually interesting. It's about constraint. How do you show people, how do you show people less? So there's an app that's quite hot in London called YPlan, which is just one thing to do every day.
It's fantastic. Now that is powerful curation.
And I open it, and every time I open it, it's indie band, so I'm not interested. So it doesn't work for me. But that's kind of the point. I mean, one of the ways I think about this is this old Russian joke, Soviet joke, that a guy goes into a shop and says, "You don't have any sausage, do you?" And they say, "No, we're a fishmonger. We don't have fish." The butcher's next door, they don't have any sausage. And
nobody has anything.
Well, the point is, though, that it's like, well, where do you want to be lost? So you can be, where do you want to be hard to find?
Yeah.
And you can see this in apps. So, do you want to be in the App Store and you're one of a million apps and people have to know to search for you? Or do you want to be in Yelp and you're one of a million restaurants and people have to know to find you? Do you want to be in YPlan and you're the restaurant that one day but people have to know about YPlan? And the underlying problem is there is more stuff happening in any field, whether it's music or restaurants or things to read or anything. There is more great stuff that you want to do than you can possibly do in your lifetime.
Attention is becoming the limited quantity.
You need some filter, and the filter is always arbitrary. That's the point. It's not.
It doesn't have to be if it's contextual. I actually think that there's a future. I'm working this out as we speak, so this is not a fully formed theory. But I think that as we move into this idea of contextual and predictive technology, that there could become a story in which algorithms are better than algorithms plus humans because the computer knows you, right? It's more personal. So I would actually prefer to have an IRL conversation with my friends about what book to read, and then have my phone know what I have read, what I have done, where
we're basically tipping into AI
and then just tell me what I'm going to like.
Yeah, we're tipping into AI.
Tell me, instead of trusting anybody
And then
else.
how do you program the AI? You program the AI to make you... Are you programming the artificial intelligence to make you go deeper into the verticals you love? So you love Bob Dylan. Hey, we're going to get you this outtake from this crazy thing. Or are we going to try to expand you and say, hey, you like Bob Dylan, you're going to like Kendrick Lamar because he's lyrical or whatever. Like, how do you program that AI? Is it going to make people more myopic, or is it going to open up their horizons? So there's going to be some dials in that too.
Of course, and there can be discovery. But like the reason that I like Spotify better than I like Pandora is that ultimately I don't want to hear a song like the song I like. I want to hear the song I like.
When you know what you like. But don't you have times when you want to just be like, I want to just be in the mood for this?
Which is why I pay for satellite radio.
I think the thing
combine it with Spotify.
The thing we're circling around here is that this is not a solved problem, and this is kind of the point I was making about people look at Apple News and Apple Music and say, well, duh, we've got Google and we've got Spotify. It's like, well, no,
there's still more work to be done.
That's just your starting point.
Discovery and recommendation and personalization, all three, I think, have to.
And Netflix was so close, but then because they narrowed the field of objects in which they could recommend by only ones that were streaming, it kind of screwed it. But it was so delightful when Netflix was like, you like this, here's some things you might like. And it was giving you the full catalog. Now that they don't have a lot of a complete library. I go to Amazon now to try to look at the predictive analytics there and the collaborative filtering.
I collect terrible Amazon recommendations.
Yeah,
as somebody
they are
who's
not good at that.
As somebody who's bought books by Seneca, you may like to know that his new title is out.
Yeah.
It's just they've been doing it for 20 years.
No, but I tend to tell you, when I look at
how do they not know that if I looked for something and then bought it and then sent it to an address that's not mine, it's probably not something I'm interested in. It might be a gift. Don't bring that back to me ever. If it didn't come to my house.
I had an interesting
I mean, there's so many data points that they have that they could draw connections about, and they don't. Or if I looked for flowers before Mother's Day, but now it's not Mother's Day anymore, why am I still getting bouquets?
The canonical example is that I'm still getting is people who have children who still get recommendations related to the last thing they bought 9 months ago.
Yes.
So if I bought a toy for a 2-year-old 9 months ago, don't show me toys for 2-year-olds. Show me toys
put
for 3-year-olds.
+1, +3. Yeah, just put a +1 on that. But there's some developer who could do that in a month of code, and it's just it shows you how early we are.
To go back to Apple, I think there's a higher level point to make about both I/O and WWDC, which is it's about pulling people away from the web and pulling people away from the list of 10 blue links.
And this is like a huge this is the Achilles heel of Google. I mean, if you look at what happened at WWDC, they had that big F you to Google slide, as I called it, which was, we're not storing any of your data ever. We're using all the local information on your phone to give you stuff. And by the way, if you want to search for stuff, you can now do calculations in Spotlight or in the little drop down, whatever they call that. You can now do weather. You can now do sports scores. And they're just like, oh, and now you can do deep linking. If you search for a recipe on your phone and you have cooking apps or Epicurious or whatever, or Gourmet, it'll send you to a recipe in your app. And this is going to be the death knell of Google. This could take, if this gets going.
Well, only if everybody uses iOS, because Google has deep linking now, and they also have Google Now. They have that Now on Tap, which actually permeates apps, so that they layer Google services on top of apps.
But Now on Tap is exactly the same thing. It's getting people away from going to a search box and typing something in and getting 10
so the question
but it's doing that with Google embedded into apps. So there's still that's a way for Google to follow people into their Android apps.
Hopefully, but Google hasn't really been able to get their. Hasn't been able to. The question is, so yes,
Google doesn't execute.
Well, there's a little bit of that. I mean, they kind of suck in terms of mobile thing, but that's just our snobbery here in San Francisco about iOS being so much better. But the issue is, their business is predicated people are going to search boxes, not recognizing the ads and clicking on them, and that business is, I don't know if you guys would agree, at great risk.
I don't think I'd go quite that far. I mean,
at risk?
I tend to come to Google from the other end, which is that Google is a vast machine learning engine that spent 15 years stuffing itself with data. And everything they do is about reach, both getting reach for getting stuff in to feed the machine and reach to get out to users for people to do search and potentially for the ad business as well. But those are all applications. Web search is an application, and the ad business is an application, now is an application of an underlying platform, at least in a kind of conceptual sense. Yeah. And so as long as they have the reach and as long as the underlying machine learning engine can see everything more than anybody else, and everyone else is like, Bing is fine, it's 2 years behind, it will always be 2 years behind because they started however many years later. And so as long as that is the case, everything else flows out of it. In a funny sense, it's almost like looking at a really early stage startup. It's like looking at Facebook or Twitter in the early stages and saying, well, we don't know what the revenue model is going to be, but with this level of passion, this level of value, there will be revenue models. And I think you could apply the same thing to Google, which is as long as Google understands everything better than anybody else, the revenue will kind of flow. And yes, CPMs might go down, fill rates might change, and mobile is different from desktop. But I think that's kind of a second order question. The first order question is, does Google go blind? I mean, I wrote a blog post about this the other day, basically saying Apple is afraid of the developers leaving, and Google is afraid of going blind. Right. And nothing else actually.
What does it mean going blind in this context?
Not being able to understand the data in order to be the place that you go. Because as long as Google can answer that question for you, that's where you'll go, and it doesn't matter how you get there. And as long as you're going and asking the question and that question has intent, then they can monetize it.
Yeah, but what happens when you have the answer already, and you're going in through a different interface? Like, so yes, they have the deepest database, but it turns out a lot of the searches are repetitive, so it's getting very interesting. What do you think? Is Google at risk, Molly?
I mean, I think it is the click on an ad that you think is not an ad. Is that model at risk? Maybe, but I actually do think that there's a valid question to be asked about whether Google is incubating itself, right?
Yeah.
Like Google is its own venture capital arm. It's looking for the next big thing within its own company. It has an execution problem, and that I think is what puts them at risk. I think they do these very clever things, but then they roll them out to extremely tiny audiences, like the next version of Android, which is going to be on 2% of phones, or a really high-end Nexus device, which hardly anybody's going to see, or things like legitimate innovations like Inbox that are not available on business accounts or on Google accounts, only on the core Gmail.
It just seems that Larry is not engaged in the core business. He's engaged in everything like futuristic.
Well, because the core business is going to die. You're totally right about that. So he should be engaged in other things.
I guess, but it seems to me like they could be running the core business better. Like when you do a search, and I did a little screenshot on this piece where I was like, listen, I think my hypothesis was in the piece I wrote, they're adding search features at a pace of like 2 or 3% a quarter. And at that pace, like I don't know that Apple catches up, but I do know they're going to take 20% of searches, maybe 30% of searches away. And if they do that, that could be the start of something. And then you look at what Google's doing. I took a screenshot of used iPhone. Of the top 12 links above the fold, guess how many were ads? Take a guess of 12.
All?
Yeah, 10?
11.
11.
Literally 11. Quite literally, in fact, Benedict. Were
literally 11.
Quite literally 11. And I was just like, you can only grind users to a certain point. And then this guy who's like an SEO guy who like doesn't like Google, like did a whole study.
Well, that's the legacy business. So you can look at Google Web Search in the same way as looking at Microsoft Office.
Yeah.
It's like it's this great product.
We're just going to grind every dollar
It's a great product. They'll grind every dollar out of it. People will chew away at the sides by saying, oh, you don't need all these extra features. I mean, frankly, people saying that people will use Google Docs instead of Office is like saying you'll use Bing instead of Google. It's like, it's fine. Yeah, it's fine. But the other one is better.
Yeah.
So I'll use a better one. And I'm not going to switch to this kind of crappy alternative. But that is the legacy business.
Yeah.
And it's very clear from what Satya Nadella has been doing at Microsoft that Office and Windows is the legacy business. And yes, you do sensible stuff there, but you really need to think about what's the future of productivity and how do you change how people work.
Is Microsoft impressing you guys? Any moves they're doing?
Microsoft is, I think so. Microsoft has, I think they've drawn that line. They said, okay, that's the legacy business. There's a whole bunch of sensible stuff you do to keep that going and to prop that up and make that move forward. But that is the legacy. And there is going to be a future beyond, not Office, PowerPoint, there is not a future beyond Excel, PowerPoint, Word. There is a future beyond slides and spreadsheets and formatted documents that is around messaging and collaboration and the cloud and networking and the connective tissue of the enterprise.
I think Microsoft has the best opportunity they have had in a couple of decades now because they are breaking down the walls internally. I think the stuff that Satya Nadella is doing organizationally is actually the biggest innovation. I mean, he is disrupting that company from the inside out. He's breaking down the silos. He's telling them they have to communicate. Bill Gates stood at E3. It had to be 12 or 13 years ago now. I saw him at E3 talking about how eventually you would be able to get your gamer tag, your Xbox gamer tag on your phone.
Crazy.
That is only now happening because Microsoft has been so dysfunctional as a company. So I think we will find out whether they have the ideas and the innovation to succeed. But now they're in a position to actually make those ideas and innovations work as opposed to letting them just die on the vine.
I wonder what the role of Microsoft would be if Gates had stayed engaged. Wonder where they would be at. Like, because he was so aggressive in his prime. Like, he had that Zuckerberg-like mentality of, like, I just have to win
win at
and
all
win
costs.
and win and win at all costs, at any cost.
But maybe that's what created some of that culture, though. I think that what they had is internal competition.
Yeah.
You know, and Nadella, I think, is building a more collaborative culture, and that may, in the end, be better.
You can see this, I think, at Google. I mean, I think Michael Mace wrote this great blog post a year or two ago talking about conflict. Basically, the punchline was Google is a company that talks like a charitable foundation but acts like a pack of wolves.
They are so relentless.
And the point that he was making was you have an internal logic of an organization, and you see this at every big company, which is this is a strategy. Fine, okay. Now you have a 35-year-old VP who's put in charge of this project, and he's got perfectly rational objectives that has been set. He's got to get this metric up by that percent and that metric up by that percent. How do you do that? Well, you go and do these 5 things, and then this other guy goes and does these 5 things. And it turns out that for him to hit his targets, he has to screw that other guy because those are the metrics that they've each been given. And it turns out that if I was to achieve that strategy, I would fail all my metrics, and so I'd probably get fired. And so actually I can't pursue the strategy that the chief exec spent an hour talking about because I'll get canned if I follow that strategy. strategy. And so you have all those sort of internal dynamics going on.
And nobody's in charge. That's the other thing you always find at like Google. Nobody's in charge except somebody's really in charge. Like it's like
Sundar is supposed to be in charge.
Yeah.
And I think this is, the interesting challenge for Sundar is this, that, you have, a very obvious example. You do a new cool thing like Google Meet, Google Photos. Okay, should that be on iOS? Should it be on iOS first? Because that's where all your high-value users are. Yeah. And the answer for them was, yes, it's going to be on Android and iOS at the same time. And that must have been an argument.
Yeah, that was always the argument that Steve Ballmer fought, and then he left, and all of a sudden,
but he won the other side of that. Now, the same argument,
I think it's such a clever thing that Microsoft is doing right now.
Should Google Maps be on the Kindle? Well, if the Kindle had more users, should it be on the Kindle? Should Google Maps be on
Windows?
On Windows. All of those kinds of questions. And there isn't some, the point is you have channel conflict, and you have each executive has a perfectly legitimate point of view and a perfectly legitimate set of objectives as to why it should be done this way as opposed to be done that way. And, as George Bush said, the role of the president is decider in chief. Somebody has to sit there and make the answer to those questions. And the answer is not, well, there's a right or wrong answer. The question is, how much do you drive the broader platform strategy of the company as opposed to, you've got that product manager and
all I know is I started using Outlook again, which I never thought I would ever be. I never thought I'd be using Outlook again, but I got the iPad. I just decided on a lark because I was getting my phone fixed at the store. I was like, I haven't bought an iPad in like 4 years. I kind of I had the mini and I kind of have the big phone, so I don't need it, but F it, I'm going to buy like the newest, best one. So I bought it and I put a keyboard on it, and I like it more than I like my MacBook Air. The battery life, I like the case. I like how small it is.
I find this
and Outlook is amazing on it.
Outlook is really good.
It's so good on iPad.
I'm generally finding that a lot of iPad apps, though, are not. I'm finding a big gap between, and this is why I thought your ebook thing was so interesting, because I think the experience of media on an iPad specifically compared to my phone, although I want more apps to rotate on iOS. Why did they not know that they have a phablet?
It's too much work.
It drives me crazy.
It's a development cost thing.
But there are many. It seems that there are fewer iPad apps. It also seems that they are in some cases inferior, like the New York Times.
Well, they're
iPad
not
app.
updating them because it's like, well, that's. They're not 2% of your traffic.
Right.
The smartphone is so powerful now.
It tends not to be. It's it can be 5 or 10%, but it's. There's no competition there.
Right.
I mean, it's back to your point about Newsstand. It's tough. Doing application development for you come at this from another angle. Think of a magazine that we've all heard of, that we all read, that you could all pick up on a newsstand. That newsstand is probably run by 5, 10, 15 people.
Yeah.
And they're all busy, doing the print edition, and they haven't got 15 people sitting around to go, okay, we're going to completely reimagine this for the iPad, and then we're going to completely reimagine it for the web, and we're going to do all the analytics and all the development and all the stuff that people in Silicon Valley think you're a moron if you're not doing. The reason they're not doing it isn't because they're morons, it's because they're busy doing what they're already doing. And I think that was the big problem for newsstand apps. It was like they just didn't have the time. They didn't have the culture, they didn't have the resource to actually sit and do that. And
it's a very specific development too. It's a very specific development for a very specific part of one specific platform. It's not a broad. It's not a broad goal.
Let's talk about, keep the program moving here. Let's talk about the most functional and well-run organization in Silicon Valley, perhaps in Silicon Valley's history, Twitter. So Dick Costolo stepped down.
Sort of.
Didn't see that coming, but he stepped down, or was pushed out, or was tired of being the whipping boy of Wall Street. Jack is now in charge, and he wants the job, or maybe he doesn't want the job. There's conflicting reports. A Saudi prince wants him to take the job. I think he made a lot of money off of Twitter. But Jack has Square, and Square is going to IPO soon, and they're going to file, so he can't really run two companies. He's no Elon Musk. Although he's pretty smart, obviously.
Maybe he is, yeah.
No, he's not.
He's not.
I know both people. He's not. Nobody is. So who's next? Who's going to be the CEO?
Well, also Dick Costolo is gone, but not really gone because he's on the board. And also this is a change in direction, except that it's really not, because they both went on CNBC and said, no, everything is awesome. This is exactly how we want Twitter to work. And it's going to work exactly the same as it's been working this whole time, which is going to be amazing.
Of a team.
Right. And they are, in fact, still the team in charge.
So Adam Bain's going to clearly be the next CEO. That makes sense to me.
Yeah.
I think it's an Adam Bain show. Because I like Adam. I think he's like, the ad network was really run well. The acquisitions have been very solid. Vine and Periscope. These are two really material acquisitions that added tens of millions of users. What do you think, Benedict?
So,
You're a power Twitter user. Let's start from the user angle, because you have no conflict talking about the user angle.
So I think there is a kind of a catch-22 at the heart of Twitter, which is that it is, when you sign up, it's a blank canvas and you don't know what you're supposed to do. And to turn it into something good, you've got to invest about a month of your time in working out who to follow. And the fact that you've invested that time means that you've got fantastic interest data and fantastic interest graph. And so the ad product, yes, they've executed really well, but the ad product is kind of an easy thing to execute. You've got this interest graph, go out and build products to sell it. Fine, done. On the other hand, of course, the fact that you've got to spend a month, invest a month in it, caps the growth, caps the number of people who are willing to do it.
Yeah.
Converse now, if you were to solve that problem, and how you would solve that problem is like the great problem of our age.
I have it. I have the solution.
How on earth you would solve that problem? But presuming for the sake of argument you did, it's very hard to imagine a way that you would do that did not massively dilute the interest data, because you wouldn't have spent a month working out exactly who to follow. So you've got this catch-22. You've either got a great ad product or you've got great user growth, but it's not quite clear how you would have both.
Yeah, sort of simply put, there's a real question about whether Twitter is in fact a viable business at scale. I mean, I just don't, and I feel like that question has always been there. For a long time, it felt like the Valley's charity project, because it was like they were on island time when it came to making money or figuring out how to make money.
They were definitely on island time when it came to product releases.
Absolutely. And
they're like, we'll have video at some point. It's like, really? Like, you can set up video in an app in 5 minutes.
Right. We'll deal with trolls eventually.
I mean, the fact that TwitPic existed for some period of like 5 years is like, really can't host your own photos?
Well, the fact that it was only, a day ago, or maybe a month ago, that you could start to actually put a quote on top of a retweet on the web interface. I mean, just silly stuff that apps were doing for so long.
I think you could argue it the other way, which is that if Twitter had how can I put it? If Twitter had had a hyperactive management that made lots of decisions at speed in its early years, it might never have worked.
Right, because they might have tried to just copy Facebook.
They might have made the wrong. They might have done the wrong things, and by not doing very much, they allowed the thing to kind of grow and turn into what it is today.
You know what my theory is now? I've looked at this product. I think this is the product for the smart people in the world and the opinionated people in the world to debate and hang out. And then for people who are more passive and just living their lives, who just want to share like the bar mitzvah photo or like Disneyland or whatever the hell they're doing in their lives, I don't want to say dumb people, but I just want to say everybody else. Like, it's just sort of like that's for everybody else. Like, that's Facebook. Facebook is everybody. Twitter is like these influencers and the people who want to hang out with the influencers and have this big debate. Like,
there are people who want to talk.
I wish that were happening and that you're describing it as a bulletin board, which would be like, it's an old school 80s bulletin board.
It kind of is,
but
though.
It's not. It's so hateful that people are leaving it because
and you're a woman, so
you cannot have that argument.
5 times as much hate on Twitter.
I rarely do, I have to say. I think it's my zero tolerance policy.
Oh, you just read it. That's the right thing to do.
Oh, yeah. I block immediately. It's purely voluntary.
I have a one-strike blocking policy, yes.
Yeah,
exactly.
me too.
Yeah, for sure.
People do seem to forget that it's my feed.
Yes, and it's purely voluntary.
Well, I do appreciate you undoing your one-strike policy with me, because he has reinstated me about 3 times. Only after I wrote an apology letter.
You guys are so cute.
Benedict, I'm sorry. But it is like, I feel that it is.
Swung me round, yeah.
Isn't it like a old bulletin board, though, where it's like, hey, all the cool kids are over here talking, and there's like these great conversations, and it's funny, and it's meta. And that limits it from being the place where, like, everybody gets the baby photo.
It's always going to be a small business.
Have you ever seen a birth announcement on Twitter? No. Nobody cares. Yeah. Like, you care and your family cares about your birth announcement?
I had a death in the family that was on Facebook and nobody saw it because it was filtered out.
Yeah, well, that's their, like...
that's a Facebook algorithm problem.
Right. I mean, they're like, this is going to be a downer for people, Benedict.
I do feel like half the people at Facebook work on adding more stuff to the newsfeed and the other half work on taking it out again.
Yeah. Well, all they care about is what's your length of session. So if literally, like, somebody dying, and I don't mean this to be callous, and I'm sorry for your loss, if somebody dying decrease the amount of time and the engagement on Facebook, I do think that they would move it down.
So let me come at this from a different way. So the way I look at Facebook is, we talked a little bit about what Apple and Google are trying to do. The way I look at Facebook is that they're extremely successful, and I'm cautious about this because I really don't use it, or rather I don't know anyone who uses it.
Yeah.
Like, saying you don't use Facebook isn't you saying you don't have a TV. It's like the kind of the smug middle class thing to do. But I struggle to use Facebook. But caveat aside, I feel like Facebook is extremely good at surfing user behavior and going where the users take them, and ruthless about killing things, even like stuff that's a big part of their revenue that may be jeopardizing user behavior or driving people away.
Of course, they got rid of the games. They were like
Farmville. Exactly. However, I think they're extremely bad at shaping user behavior. And so if you look at things like Home or all their Photos products or Paper, I mean, I don't know how well Paper's done, but it's only on iOS and hasn't launched outside the USA, which is a pretty strong hint as to how well it's done.
Yeah.
The stuff where they kind of say, the stuff where they're saying, this is what you should be doing with Facebook doesn't work.
Yeah, they don't get that.
The stuff where they follow what the users are doing works very well.
Which is why it has such high engagement.
And
that really is why people like it.
But that's an interesting contrast with Twitter, whereas Twitter is, in a sense, they're surfing in completely the other direction, which is they're just kind of following where the users are going.
Facebook's like a diner. It's kind of like you go there and you're like, you want a hamburger and fries? Yes, we have that. There's like a lot of other things on the menu, but it's like, here's your hamburger and fries. They just keep giving you your hamburger, apple fries. It's I like it. And then like Twitter's more challenging. There's things on the menu at Twitter like haters or trolls or racists or social justice warriors where all this madness going on. And it's not for everybody.
I think there's an interesting...
Well, it's not. Isn't that the point as a business question? Isn't that what it comes down to as a business question? It is not for everyone.
And everybody's like 300 million here, $1 billion here for Facebook. Why is it only a third the size or 25% the size? Like, well, this might be the pace. And if I was running Twitter, I would just say, listen, Twitter's going to grow like this. It's going to be the authentication and the advertising platform. And we're going to buy every Vine and every Periscope before Zuckerberg gets to them, before Microsoft or Google get to them, and we're going to grow them from $1 to $5 million user products to 50 to 100 million user products. And we're going to be a whole collection of apps, a suite of apps that uses common infrastructure, common advertising, common ads, everything. This would be a perfectly valid thing to say to Wall Street, and they haven't said it.
Right.
All they've said to Wall Street is, yeah, we have a leaky bucket, and oh my God, it's not growing as fast, but we're gonna solve those things. It's like, stop trying to solve something.
Because what they say is, it's great, it's perfect, which actually might be a version of what you're saying.
It is, but it's not clear.
But they're not making it clear.
Because they don't have that second piece, which is like, listen, Twitter's not for everybody. We know that. It's growing like this, and the most important people in the world are engaged with it and addicted to it. We're going to build all these other things, just like a network. We're HBO, but we got all these other networks too.
There would still, even if they said that, I think there would still be the very valid question of how they're going to make money. Because even though you say the ad product works, I will tell you that as a user of Twitter, but someone who's never tried to advertise on it, I mean, I don't even see ads, right? They just appear in the river and then they keep going down. And so I think, I love it.
You could say the same thing about Facebook, though.
Here's the thing. As somebody who's media savvy, this is the problem with media savvy people, is we're so savvy about advertising and advertising models that we won't engage those ads. But there's this whole other group of people who just look at ads and they're like, wow, that is Kate Upton, and she's doing a game.
But are they doing a good job
Facebook's app install business? I mean, it's like I've never met people. How can I put it? People who click on ads are like people who use Yahoo. You know there must be hundreds of millions of them, but you've never met one.
Right. Because we're living in our bubble.
I will tell you, I have, maybe it was 1 in 10,000 times, but I've clicked on an ad in Facebook. I've never clicked an ad in, and is Twitter doing a good job targeting? Is Twitter, I mean, it's just, if it's a river.
Amazing. Well, but the money is there. So the money is showing it's there. Right. And the advertiser engagement, this is the reason Adam Bain deserves a job, is because if you look at the advertising role and you look at the people putting videos up there, it's like, everybody, every movie, every NBA, everybody is engaged deeply because they want those influencers
on all the time.
So the question in advertising, we're the influencers in the world.
The question in advertising is, can you break out of the experimental budget and the small budget into the real media budget? And Facebook managed that, Google managed that. Very few other internet companies have managed that.
I think Twitter's going to with video. I think you put Adam Bain in charge and you just go video crazy. Because think about it this way. Where do we all have our most followers and our most engaged followers? Twitter, right? For me, it's my email list and then Twitter, actually. So most people don't build an email list. But if you started to get the videos on there, like why would you have a YouTube channel when you have more followers over here? So when they haven't announced their revenue split yet, and they haven't started splitting revenue, but that's imminent. And I don't want to say that I have inside information. I have inside information. That's coming. And when that comes, forget it. If you're Ellen and they go to Ellen, hey, you get 55% at YouTube. We're going to give you 100% of whatever you sell, Ellen. And if we sell it, we're going to take 30%. Where do you think Justin Bieber and Ellen are going to put their videos?
Right.
They're going to be all over Twitter.
But the other outstanding question about Twitter for advertisers and even users is, can you prove engagement? Because I feel like those Twitter followers are not as useful all due respect to my Twitter followers that I talk to every day, if I post a link, they don't all go click the link. They just don't. In fact, a teeny tiny fraction of them. Entire would-be media empires have been built around people with huge followings and then failed because the Twitter users don't take action. They're not engaged in the same way.
It is interesting to think, okay, so I've got whatever it is, 75,000 Twitter followers. I don't know how many you sort of got,
like 200 something.
Yeah, exactly. How many?
I bet we have a very similar amount though in terms of engagement.
How many people actually engage? And I haven't run the numbers, but it's not 75,000. How many people reply to me? It's like 50, 100 people maybe.
Yeah, but here's the thing.
Yeah, I mean, sometimes I would argue less than 5%.
I think you have 5% see an average tweet. That's what I think my audience.
Well, there's two filters here. One is how many people see the average tweet, and Twitter gives you analytics. It's 5, 10, 15%, whatever number. Yes. But the point is, so there's 75,000 followers. So maybe 3, 4, 5,000 people see each of my tweets. How many people? How many of the tweets that I see would I engage with? I just feel like,
but the actual
like first thing to see
7,000 people on your email list.
I have. Yeah, it's just past 35,000.
But what you're doing right now is arguing against Twitter because you're arguing for platforms that have better engagement. Like Twitter doesn't have good engagement. Even if the 5% see my tweet, only 5% of that clicks on it and watches the thing. Look at the number of people who are using it without being logged in.
Yeah, so that's like a lot of people typing in twitter.com/King James or whatever.
There's a completely alien behavior for people in Silicon Valley. Like, who the hell? What would you do? But the answer is actually you can use it without being logged in.
In fact, that's what most users actually do because if you don't have a lot of people following you,
I think when you come to the homepage, it should just give you a feed of like the best of.
Well, that's what they're trying to do. But I mean, this is to the point. Maybe what do you mean by engagement? I mean, what metrics should? There's a broader kind of question. What
most people don't have anything to say.
It can be perfectly fine as a passive medium. I follow 1,000 people.
I agree, but that's a difficult argument to make in terms of advertising. If they're passive
this is really interesting. When you go to the homepage now, check this out. I forgot about this. This is exactly what
they give you like categories.
Yeah, so you're just like if you hit the NBA players, it's like you don't have to log in. You can just go look at what they're saying and be like, yeah, this is dope.
Right.
Hey, what do you guys think about this? I don't know. Have you guys done any group DMing? Is group DMing becoming a thing?
No, I get spammy group DMs. I'm about to turn off DMs because 1 out of 10 DMs that I get is even remotely useful or an actual person that I know, and the rest are all spam.
Oh, you have your DMs open?
Yeah, I do.
Oh, you can't have open DMs.
Well, I was thinking it would be useful for pitches, and it turns out it's totally not.
Open DM doesn't work.
No, it's really a bummer.
But I am getting
but so they're fun for...
You can only do closed, but I am getting CC'd on group discussions. But it's cool. It's like, Chris Sacca, Kevin Rose, this person, that person. I'll drop you in. I'm dropping names.
Yeah.
It's kind of like some famous people.
A little
bit out of line. So anyway, it's kind of dope though, because we're all having these funny discussions, and I'm like, oh yeah, I would never go
That's
put
powerful.
Everybody's mobile phone numbers with each other on iMessage, but I think Twitter should release a product called DM.
I absolutely agree.
That's a separate DM
I've even tweeted that.
That you could just DM with your friends. It would be amazing.
Because you know what I discovered recently about Facebook Messenger? It is an outstanding cross-platform, synchronized, really easy to use messaging app. It's better than GroupMe for coordinating. You can trust that everybody has it. The message history is all there. It's actually a valuable, useful messaging tool.
Let's talk about VR.
Twitter could potentially have the same thing.
Let's talk about VR. I was not a fan of VR. Who did I have on the program? Emmy Award-winning producer Jackie. Remind me who we had on the program. I forgot the name. Amir, right? I knew it was Amir. I have to say, it really is. I'm not getting motion sickness, and I'm really getting impressed by how close this is to actually being fun to use. I actually had a fun time playing a video game in it. It was a shoot 'em up game, and I was like, I could see this. It's definitely going to work for games. And I didn't want to take the headset off, which any other time I've ever put them on, the first gen and everything, it was just nauseating.
So I went to Us2, who did Monument Valley, that really cool iPad game. Yeah. And they showed me their work in progress VR game. And after 5 minutes, I thought I was being rude and I should take it off and talk to them again.
I had the same experience, which I was like, excuse me, I'm in my virtual world right now.
Yeah, just
can
go
you
away.
Please go away. This is going to be crack for kids.
It is. That's my example is I got cardboard. I got the new cardboard at Google I/O.
And you put your son on it?
And I put my son on cardboard.
He's 6 or 7 or something?
He's 8, and he is not... if he could not come out of there, he would find a way if it didn't
this is going to be seriously
my S6
dangerous.
to the point where I think
this is why we invested in Soylent.
Well, and this is why Facebook, I have to say, I did this visit to Jaunt VR, right? So we never have to eat
It's good
again.
to be self-aware.
So sad and awful. But no, it's the future of engagement. Like I went down to Jaunt VR and I watched the first-person horror movie
Which one?
trailer.
Wait, who's this?
Good God. It's called Jaunt VR.
Jaunt. And they're doing first-person.
Jaunt. They're partnering with studios.
They have a camera and production platform.
Exactly.
Wait, describe what you saw.
I think it's called Black Mass, and it's a first-person horror movie. So you experience it in VR from your own perspective.
So can you look around? Can you turn your head?
Yeah, you can turn your head. It opens with you're like kidnapped in a warehouse or something. I mean, I just saw the trailer and it terrified me. Like I had to turn it off. And I thought, okay, this is the first time. And I walked around the little Hobbit set, and actually like Gandalf was right over there. And it felt good enough that it was the first time that I understood why Facebook spent all that money on Oculus, because I thought this could be the future of engagement.
Yeah, I think it's actually, I was like a little bit critical of this like Oculus thing, and I'm like,
So I tried the first one, and I thought this is the future, and that was when it was in kind of 8-bit, and it was like looking at Pac-Man. The problem is it's tough to demo, and when you show people photos, it's too easy to laugh. You have to put it on, and you have to suspend disbelief and say yes, it's a little bit, it's low res and what have you. You have to think fundamentally this is real. You turn your head and there's stuff there,
right?
And it's impossible for me not to see that as being a big part of the future.
Yeah, the question is when does it arrive and when do the apps arrive and how much will people pay for the apps? And I was just looking at it, I was like, you know what? I kind of feel like these are $30 or $40 apps. Like these are going to become like, because if you think about how much value you get from it, like a console, it's really like, I think this is the big console game killer, because if you're into console games, like losing 12 hours of your life in a world, like this is going to be it. What I'm really fascinated by is what you're talking about, Molly, with this, like, can you do a horror film in there? Because horror films are really, that would be a great litmus test. Because
so the question of the immersion changes
for sure.
I mean, there's a deeper point about what does the form look like?
A film.
Well, what does the form look like?
Yes.
Can you be in a horror movie, and do you have to do the horror movie differently? How do you tell a story when the people watching can just turn their head and look at something else? I mean, I went and saw Mad Max the other day.
On a scale of 1 to 10, Benedict Evans, what did you rate Mad Max?
I thought it was very interesting, but I think if you're standing on top of the...
Is that a 7, Max? Is that a 7 for Mad Max?
The point is, if you're standing on top of the truck and, all these other things are coming up towards you and you're in VR and you can kind of turn your head over and go, oh, it's kind of an interesting...
Or you could crawl up in a ball and be like, please kill me so I don't
but the point
get tied to the front of a vehicle. Did you see it? Did you see Mad Max?
Oh, yeah.
Fury Road? What did you rate it, 1 to 10?
I would have loved
to
experience that in VR. It was
1 to 10, no 8?
I thought it was like the perfect movie.
But the point I'm getting at is, so like we started out doing cinema,
I give it a 9.
where you have a locked-off camera shooting a stage play, and then Eisenstein works out that you can cut, and you can like move the camera, and you can put it on a crane and so on. And we have got, but the problem is none of that language really works in VR.
Yeah.
I did a panel actually at Collision with the CEO of Jaunt VR, and then the guy who basically designed the interfaces for Minority Report, and then now has a company actually making that technology real. And that was a huge part of the conversation, is how storytelling changes when you cannot control the user behavior. What is there a focus on screen if the user can, or do you start telling stories that are almost like a choose your own adventure? If you turn over here, the story comes with you.
Here's what I think.
But where do you put cameras? Because you can see the camera in every shot. I mean, that's so interesting as a content development.
I think what they'll do is there'll be like moments of time. This is how the first version is going to work. It's sort of like in 3D, it used to be like story, and here's a 3D gimmick, we're going to like take a moment to do 3D, and let's get back to the story. And then now I just saw...
Mad Max, which was great 3D, actually.
But I also saw the other one, Jurassic Park, which was also like a great throwback film if you don't take it too seriously. And it was a terrorizing film. Like they really worked on making it scary. With like when the dinosaurs roar at you, the 3D is getting good now. I hate this stuff because it makes me motion sick, but I had to appreciate how well they integrated it into the story. So we're going to have, I think, the moments where they're like, and now it's time for you to be in control. Run from Freddy Krueger.
So this reminds me
I shouldn't take my kid to see Jurassic Park.
This reminds me a lot of the whole CD-ROM thing.
No, it's okay. How old?
8.
No.
It's borderline.
No.
Yeah,
it's borderline. Like a no.
It's pretty terrorizing.
Yeah, no.
He'll get nightmares.
So I was going to say this reminds me a lot of the whole CD-ROM thing 20 years ago, where the conversation was, okay, you play back some video, then you have a little game, then you play some more video, then you have a little
Voyager.
Game. Yeah, or the whole thing that Steve Blank's catastrophic failure, where it was a bunch of computer scientists who didn't actually understand games at all.
Yeah.
And so it turned out you had this whole conflict between, do we get a whole bunch of live action and stitch it together and then call it a game, or do we actually make Grand Theft Auto?
Yeah.
And it turns out that actually the people who did, remember we talked about interactive movies?
Yeah.
In complete blind alley. The answer is you do games. And so this is kind of the question for VR. Is this something that games people do? Or is it something that movie people do? Or is it kind of both?
And they're all working on it. Like Oculus has a studio now, and they're going to do interactive, but it's computer generated movies and computer generated content. And then you have live action movie development, which was all a bunch of us premiered at Sundance, and you have extra content, and you have games, and I guess
this could be, by the way, I think this is going to be the rebirth of the music video. I think somebody could make like an MTV just out of VR where it's literally 3 to 5 minute experiences in the same way like Michael Jackson's Thriller was like, or Madonna's Like a Prayer, or
That's what the
any of that stuff was just like, it was a great 3 minute, 5 minute experience, 10 minute experience. Somebody should just make literally MTV and you just turn on your headset and you just get entertained for 4 minutes at a pop.
Well, that's what Samsung's Milk VR service is, and a lot of these makers now have they have some app that goes along with it. What I'm curious about for this show in terms of VR is, would you invest in it knowing how big Samsung's going into it, how big Microsoft's going, how big Google's going? Is there a place even for startups? Like they're just getting sort of Google's announcements. I was like, oh, goodbye, Samsung Project Beyond, and maybe even Jaunt VR. And
the question is where how does the value chain configure itself? I suppose the question is this actually just a screen? Does the 3D of itself, the display part, become a commodity technology product, as has happened, for example, to Android smartphones?
Right.
And
because quality maybe doesn't matter as much as how great it is to just put cardboard on.
You're fighting Moore's law here because fundamentally VR is just a smartphone built differently.
Yeah.
It's all smartphone tech, not chips. Yes, Oculus needs this monster PC, but give it 5 years, it will all be smartphone technology. And the technology is all commodity. It's all just bought off the shelf. So is there like a long-term defensible window for people to be actually making the hardware and building a whole software platform around that? Or is it, as I said, is it just a display? And then the value sits elsewhere.
The business I would get in, honestly, is the new home theater business. Because when you go into those demo rooms, you have to have a chair that swivels, and you have to have like a sort of a springy cord so you don't get wrapped up in it. And you have to have a soundproof room with really good speakers, surround sound speakers.
This could be a renaissance for the arcade. Literally, if there was an arcade where you could go right now, like the three of us after the show could go play a VR game, but like with the top of the line equipment, put the headsets on, and we could just goof off and play like an hour of games while we eat French fries, like a bowling alley.
Right.
Because it's going to be $3,000 or $4,000 to set up a rig.
Yep.
You have to have like a video. You have to have two $1,000 video cards or something. Of course, Moore's law would get us there, but I do think these like really professional headsets and experiences with the stuff.
So this is a slide that I have in another presentation. Is that the iPhone 6 CPU, the A8 chip, which has CPU and cache and a bunch of other stuff. It has something like 600 times more transistors than a Pentium from 1995.
It's amazing, yeah.
And so you add up all of, and that you can, if you're a semiconductor engineer or a chip engineer, you can argue about that. But directionally, what does that tell you about where we're going to go? This will all be in the smartphone. There will be no standalone PC.
And there's going to be no. I mean, it's
which is, I think those headsets are the most.
Well, we're very close to the point of time where you would take your laptop out, and all it is a screen and a keyboard, and it's connecting to this. Wirelessly, and this is the computer.
We were talking about the iPad earlier. It's interesting to put the new MacBook and an iPad Air and a Surface next to each other.
There's no difference.
And say, well, what exactly is the difference between these?
$400.
And also the apps are worse.
One's a closed ecosystem, one's an open ecosystem.
Yeah, what is a closed ecosystem that's had 75 billion downloads?
Well, it's closed in that you can't put anything you want on it.
That's true. I actually think the iPad. I think the iPad.
That's why I'm not full iPad.
Well, define you, because for there's 50,000 people who care.
No, I know, but I mean, when you start, that is the good point. It's 95% of people. There's nothing they don't.
95% of people
they can't get from the App Store.
There is vastly for the vast majority of people, there is vastly more that they can do on an iPhone than they could ever have done on a PC.
Yeah, so much easier.
And even the quote unquote small universe of apps that they can install on the iPad versus what they could do with their computer. You're right. They don't care, and they actually won't care that in some cases the apps aren't as good because quality is totally lost to convenience.
Okay, rank in order. The most used on a per minute basis, VR verticals. Education, games, or porn. in minutes used 10 years from now, which one will be number one, which will be number two, which will be number three?
Well, minutes used is a bad metric for porn, if you've ever looked
Fair
at that.
point. Let me start again.
I challenge the...
Okay, hold on. Which will be the most profitable business?
That's also a bad metric.
Because people pay more for games and they don't pay for porn.
Yes.
Right.
No one makes
How do we
money
do
off
this
porn
bet?
anymore.
How do we do this bet? Which one will be the most frequently used? Frequently used. Not session, not money, but frequently used.
Frequency. And it's games, porn, and what now?
Education.
Oh, please. Education. That's adorable.
Education. We know number three.
I mean, it should
How about
be.
a porn game that educates you?
Well, only in Japan.
Dr. Ruth's virtual
only-
reality
I mean,
test.
porn is a version of education, but unfortunately, it's ruining everything.
Only
Yeah,
in Japan.
exactly. What's that?
Only in Japan. There's lots of porn. There's big business in Japan for porn games.
Is it really?
Yeah.
What's your favorite?
I have no particular view.
He just turned into Hugh Grant.
No view, he said.
What?
I have no view. I'm just aware
As
of
in
the
he
business.
refuses to
I
choose
just
a
have to view that.
Porn is a dark matter of the internet.
Yeah, I
Porn
mean,
is a
it's-
dark matter of the internet.
It's whatever it is, half to a third of all traffic.
That's amazing.
Yeah, it's porn.
It's porn. So porn is number one, frequency, games number two, and then education number three. Is that your order too?
I actually think education could be number two. I would say. If just my ranking is
This is
porn,
what I think-
education and then games.
You don't want to do the ranking game. All right. fine.
No, I mean, I
But
kind
Benedict,
of
see, you're a great guest, Benedict. You're very smart, but you don't play the games. You got to be like willing to give the score to Mad Max. Is it a 7, 8, or 9?
Out of what?
10. 1, 2, 3.
Is 10 best or worst?
10 is. Jesus God.
So I've got this
I've never
dongle
met a
in-
smart guy who doesn't know how to play the game.
Oh, he knows. He knows.
7, 8, or 9.
I haven't-
How about 1 to 10?
So
no
I
eights?
haven't been to enough
Half
movies
points,
lately to
okay.
rate it fairly. I thought it was.
How about your enjoyment?
You don't need a data set.
Okay.
You like it?
But it's like, it's not really possible for
let me-
me
so let me
without
I
having
made a
seen
deck.
the full
Okay, so-
corpus of films this year.
So I'll answer the question another way, which is it one of those films that you will want to show people in 20 years' time if they've never seen it, like Aliens or...
No, we just want to know if you liked it.
yes.
Yeah,
Will it be one of those films where you meet somebody who hasn't seen it in 20 years
And you
you'll say,
say-
oh my God, you should see it?
Yeah.
Yes, I think it will be.
Oh, really? So okay, that's good. So
Oh,
you say
that's
it's
high
the
praise.
test of time, which means it's definitely above a 7. So
Yep.
it's either an 8, 9, or 10, partial elimination. I gave it like an 8.5. You give it a 10. So we know what
I
it's
think there's an interesting story in there about contrasting
I
it with the Marvel
hyperbolize.
movies, for example, and what
Yeah.
the Marvel movie... I mean, there's a whole other narrative about
Did you just say Marvel?
whatever you call it, comic book movies.
Marvel.
I don't care. Comic book movies and how they relate
Plus,
to
you
9/11
just made
in
Marvel
New
into
York,
shorthand
example.
for comic book.
And why,
yeah.
why all the apocalypse movies happening in San Francisco and not New York?
Yeah, there is. It's very hard. Actually, it was very
And why,
hard.
and
Like
why
San
am I
Andreas
supposed to
also.
enjoy watching 5 million people die horrible deaths on screen?
Yeah.
I think it's cathartic
I
for
am
some
gonna see that
people.
San
It's
Andreas
something
movie
weird.
then.
But I have to say, like, it did affect me for a long time seeing films, having been in New York and lived in and seeing 9/11 firsthand. Like, it did affect me, like seeing these like disaster films.
I wonder if that's why. Actually, why San Francisco has become the new setting.
Oh, I think it's.
Well, I think
that's sort of
and I think
Benedict's
the
point,
comic
right?
book, I think you can definitely kind of draw a line between 9/11 and all these comic book movies about the skyscrapers collapsing and the superheroes saving everything. And
Yeah.
you know, there's no real blood. You know, it's not like all those 80s action movies where Bruce Willis and Arnold Schwarzenegger, they got bloody and they got bruised and so
People
on.
got shot.
People died.
Yeah.
You never see.
At least they're
people
not
die.
showing people jumping from the buildings. It's also like very comic book violence, to be sure.
Yeah.
Like the buildings are collapsing, but the people are not
Yeah, I mean, there's
having their
another-
bodies ripped apart.
It will be interesting, in the very long term, it will be interesting to see. I mean, it's something we haven't talked about at all is what's going on in TV and movies. But, clearly...
Here we go.
A lot of what's going on is a shift in the economics of movies and, adult filmmaking shifting to becoming TV shows and comic books movies becoming...
What's your favorite TV show at the moment, Molly?
Oh my God, my favorite.
Or pick 3.
It's amazing how we have a cultural phenomenon happening where you're actually sort of embarrassed when you're behind on TV. Like, oh, I should be better about everybody's favorite show. Because my favorite show is whatever crappy action movie is on FX.
Really?
I do all of my best work between 8 and 10 p.m. when my child goes to bed. I just sit on the couch and look, and there's always something good exploding on FX.
Yeah.
Because bad but awesome is my preferred genre for media. And so
Bad but awesome.
Like, it doesn't have to be good. It just has to be awesome.
I think that's the name of
has
your.
to-
I think that's your.
I'm a big
that's
fan
your
of
blog
honest
now.
movies.
Bad,
we
bad
knew
but
we were
awesome.
making a
Tumblr.com.
we knew we were making a crappy movie. Exactly. And I'm like, you know what? And I am in.
So you don't have a TV series that you're watching that
I
you're.
don't.
fan
Well, I'm into Daredevil.
Oh, the Daredevil's amazing.
but I'm
I
not
loved it.
caught up.
Did you watch Daredevil?
I'm close.
It's a Marvel movie. Serious. It's a Marvel series.
You could just call it comic book because comic book people love
Actually,
it when
here's
you
the thing.
reduce it to
Yeah,
just
then
To your
there's
point-
a whole other Broadcom set of
to your-
movies as well.
You would really like this Daredevil because what it
Daredevil's
is unlike the Marvel movies like Avengers, it is a dark, gritty, adult, action hero
About
where
a guy
people
who
are.
dresses up in underpants and flies around the world.
He doesn't fly.
can't
He's a
fly.
blind lawyer
And
who
he's
has
just a guy.
superhuman talents. But he's trying to, and the other actor in it is, what's his name? God, Vincent D'Onofrio. Fantastic as the Kingpin.
Yep.
Well, that's my point.
really
All
multi-layered,
adult filmmaking
both
moved to
really
TV.
multi-layered characters.
Adult filmmaking moved to TV too.
It absolutely
to a large
did.
extent.
And then
just-
now
I
that we
want to
have
let-
sort of more freedom in content development, it can be darker and bloodier and just more
Can have a
nuanced.
smaller audience and,
and
still
have
be
a smaller
successful.
audience. Yeah, like
looks
Halt and
like-
Catch Fire. I interviewed those creators on Marketplace.
Which ones?
Halt and Catch Fire.
What do they do?
Which is about it's about the Silicon Prairie. It's about the development of the PC industry in the 80s in Texas. Like a show that would never get greenlit under any circumstances.
But they can
much
do it
less get
for
a second
$300,000
season.
an episode or something.
And it's funded completely by The Walking Dead because it's on AMC. Really interesting business model for TV.
I'll give you
Just
guys.
like not everything has to be a hit. Thank
if
God.
you're into horror films, The Babadook and It Follows. I was never into horror films,
I'm a
but
big chicken.
there's now all these like horror films that are like really like kind of indie horror films, and these two are like particularly terrifying and weird. That's it.
It's not my jam.
What is your favorite TV show right now? Peaky Blinders.
No. I don't watch much TV, but I watched Silicon Valley.
You do like Silicon Valley. How come Mark Andreessen has no cameo? No cameo for Mark.
I like the Mark Cuban character on Silicon Valley.
That is the best. Everybody's like, "Is that you?" I'm like, "I'm not a billionaire. I don't own a sports team, and I am not drinking tequila."
Speaking of owning sports teams, like, are you buddies with Chamath? Because can he be a little more Mark Cuban about his ownership of the Warriors? Like,
I'll
so
talk to him tonight.
invisible.
He only owns 10% or something, so he's not like the main owner. Joe Lacob is. He's the guy jumping up and down.
All right, that's
but
fine.
I'm
Still,
gonna watch the game later with
He
Chamath.
tweets about it like a time. Of course you are.
Yeah. So the head of HBO asked me if Silicon
Oh, did
Valley
I drop
was
that?
was
I was at the
real.
game I was at the game the other night. My
Yeah.
friend,
So he
my
asked
friend
me if
David Lee got me the tickets.
asked me if Silicon Valley was realistic, and I said it's about as realistic as Entourage.
I think that's probably accurate. It's exactly 60-70% accurate. It's.
Yes.
I have to say, there really are, like, it's a super accurate show. It's like, and I watch it and I wonder, are people who are civilians understanding any of this? And it's like, I don't think they have to. They just understand it's funny and interesting, and there's a lot of jokes for us. Like,
And I have met Ehrlich Bachman.
you met Ehrlich.
Well,
TJ.
I have met somebody who is Ehrlich Bachman.
Yeah, no, we've all met.
I'm kind of sitting right here, Benedict. This kind of
Present company excluded. I've met somebody who basically could be Ehrlich Bachman.
I liked when he went on his vision quest, and he's like, I've got to take mushrooms and get the name of this company. And he's like, because Steve Jobs dropped acid, and like it's like a big tradition. He goes and takes a bunch of mushrooms and goes to the desert. He is a classic. And when they went to the VC firms, you have to admit, when they were negging the VCs,
Yes.
and they're like, literally like, I am not going to take your money, and you guys are just like.
That was hysterical.
That was hilarious when they negged the VCs.
And I feel like people in the Valley talk about how they get weird details right that you can't figure out how they got them right. Like apparently it is a thing at Uber that the doors open like the wrong way and no one can ever figure it out or something. And that was in Silicon Valley. And my friend who works at Uber was like, how did they know that about the doors?
I actually can tell you. There's a guy. It's very simple. There's a couple of people who are running around the Valley.
Right.
And like they came to my poker game once at the D conference. They come to a bunch of different things and they just talk and they take notes.
Yeah,
So
I know people who've talked to them about.
Yeah, I've talked to Dan Lloyd.
It's a bit like that. So there's a comic strip. Going back to the old stage.
Boring answer.
There's a comic strip in one of the UK papers about investment bankers, and again, it's it's intermittently extremely funny, and again, they're just fed lines by people in investment banking all the time, and every now and then when it's a story about some particular person, people will cut it out and leave it on their desk. It's like that guy got shifted to a non-job. So if there's a joke about a guy who got shifted to a non-job and hasn't realised it and hasn't realised he's supposed to be resigning. People
it's literally in the comic first?
Yeah, it's in the comic.
That's pretty sinister.
People will cut it out and leave it on his desk.
Ouch.
Ouch is right. All right, listen, this has been an amazing episode. Let me just start out by thanking Benedict Evans for using that funny voice and that interesting version of English. I don't know where you got it from.
Thank you for using your funny voice.
You're really smart and you're funny. I really like Benedict Evans. I'm a Benedict Evans fan. I find you very
I have good taste
entertaining.
in pastries.
You do. I went to the donut shop you told me about.
Oh yeah, Bob's Donuts.
Bob's Donuts, and I got there late, but that like really
It's
nice.
open until like 1 a.m. or something.
No, but you know what the problem was? Everything was gone, but they had the apple bear claws.
Okay.
And that thing is this big. So my daughter's 5 years old. Apple bear claw, what's the name of the place? Not Stan's.
Joe's Donuts. Bob's
You said
Donuts.
Bob's Donuts.
Okay.
Bob's Donuts has a bear claw that literally is the size of a bear's claw. And I quite literally, and I cut it in half for my daughter, and she's like, I want the whole thing. And I looked at her, I said, listen,
It won't fit
half
inside you.
is a donut and a half. If I give you 3 donuts as your father, do you realize what a bad father I would be for giving you 3 donuts? And she's like, I would love you.
Yeah, totally.
And I was like, eat your donut and a half. I mean, this is bad enough. But Bee Patisserie, oh my God. What do they call that? The Queen Amman? Have you been to Bee Patisserie?
No.
I'm sorry to the people who live outside of San Francisco now that have to hear
Like
my
Oakland.
Like Oakland. I know.
I don't have that.
It's fine. It's fine. I know you got to catch your flight.
Brooklyn to
You got to catch your
Brooklyn.
flight back out of SFO to Oakland?
Yeah, so if San Francisco is Brooklyn to an unbuilt Manhattan, what does that make Oakland?
I just call it Brooklyn.
Staten Island or something?
To an
You're
unbuilt.
really being cruel now.
Wow.
You're being very
I know.
cruel now,
I've been to
Benedict.
That
to
was like a
Oakland more time
reduction and then a reduction.
I've been
and
to
then a
Oakland more
reduction.
time than anybody I've met here. So my wife's a musician. She keeps doing gigs there. So
Because
I keep
it's
In Oakland?
great.
Yes.
Yeah. That's because all the cool kids are over there.
Yeah.
It's true.
All right.
I'm
Listen.
pretty sure I saw them shooting Mad Max around the corner.
It is true.
I have.
I definitely
I
saw
have
the
one
guy
of
with the
those
guitar.
cars. Yeah.
Yeah, those are actually that was actually filmed.
You need a
actually,
lot of weapons
You know,
on
it's a
your
little
car.
known fact.
That's
Actually,
true.
that was filmed at Burning Man. They just came a couple days early. That's a true fact. You didn't know that? Those are all burned. A lot of the extras are burners, and they CGI'd the wall. You didn't read this?
No.
I thought
they
that you
filmed
mean
it
apart
in-
from shooting it all in
I thought they filmed
Namibia?
it in Namibia, yeah.
No. A whole bunch of the other set pickups were done at Burning Man because they had all those people. I'm making that up.
Thank you.
You're welcome.
I thought
I am
so.
such a good lad.
That was good though. I was on the border of being convinced.
Almost.
It was upsetting.
That's why I use the word
I was so
pickups. I
confused.
use the
Yeah,
word
I'm now
pickups.
thinking about which other
I
things
need
you
a
said today
pastry.
you made up.
Nothing is. Benedict was not fooled for a second. Benedict was like, you're lying, Mr.
He's up to
Calacanis. And thank you, Molly Wood of Marketplace. You can follow Molly Wood at Molly Wood on the Twitter, and you can follow Marketplace at Marketplace on Twitter.com. Thanks again to Squarespace and HostGator for sponsoring This Week in Startups. Independent media like This Week in Startups is not cheap to produce, and I have to pay a lot of salaries to get this show on the air 104 times a year, but I'm not bitter about that. And I thank Squarespace and HostGator for providing great services on the web and sponsoring the program. Stop your NPR voice. For the love of God, please stop your NPR voice.
Your employees are like, A, you're welcome, and B, stop your NPR voice.
All right, everybody, this has been a great show. And thanks, Jacob. I'm going to miss you, buddy. You did a great job for me for almost a year and a half. I wish it had been 2 or 3, but I wish you great success in your future. You crushed it for me, and I do appreciate that. We'll see you all next time on This Week in Startups. Bye-bye.